Ed Lazear, my favorite economist, chairman of President George W. Bush's Council of Economic Advisors. Ed, welcome. I'm going to get right into it. I really need you to divine some of the very counterintuitive variables inside this report. Markets seem to think it was a positive. Jobs were okay. I think they're jobs light. But let's start out with two areas. Wages, unchanged month over month. That's the lowest level since October of 2017. And if we look at year over year, 2.9, weakest year over year change since July of 2018. And of course, the 50-year low in the unemployment rate. Discuss those.
Okay. Well, a few things. First, let me just give you a couple more numbers, and then I'll come back to yours, particularly the wage one that you talked about. One of the good numbers that hasn't been talked about is the employment rate. That's now up to 61%. Many economists are thinking that's about the peak given demographics. Before the recession, it was at 63.5% because of
so you're talking employment to population, EPOP. You're talking EPOP.
EPOP.
Okay.
Exactly.
Yeah.
And that's, most labor economists think that's probably the best indicator. Anyway, that's good news. The jobs numbers, as you said, they weren't spectacular, but we're at about 157 over the last 3 months, and that is still considerably above population growth. So what that tells us is that the economy, the labor market, is still heating up relative to what we need to keep up with the number of new people coming into the labor force. So again, not bad, and that number is up by, it's still about double what we need. So still not too bad. Now, you mentioned wages, and I think that's the important one. The wage number, as you point out, was not spectacular. It's 2.9% year over year. I don't worry too much about month to month because there is some volatility in that. But the way I would think about it is, how does that compare to productivity plus inflation? Because that's the number that you want to think in terms of. The number that we should have in mind is we should be growing wages at productivity rate plus inflation. Right now, we're a bit shy of that. So productivity has been up this year. And what we tend to find in labor markets over the business cycle is that things move with a bit of a lag. So I guess the only way I can calm your nerves, Rick, is to say be patient. Hopefully this stuff will catch up. We are at a level consistent with productivity and inflation that we saw over the previous 2 years. So we still have time. But again, I don't disagree with you. I wish those numbers were higher.
All right, now when it comes to JOLTS, never anybody's favorite, but boy, it has been on a tear the last couple of 3 years. It's just like a 45-degree line up, and it peaked about 7 or 8 months ago, and we're down about 5% off the highs. But the highs are dramatic highs, and you pair that with Kate Rogers today, and I know this is anecdotal, but it's a big anecdotal issue. I sent you the transcript. Samsung plant in South Carolina wants to hire a lot of people it can't find.
Right.
We don't talk about that dynamic much since the slowdown. Equate that within the slowdown in the jobs report. Are there still lots of jobs that need to be filled and we just don't discuss it as much?
There are, but it actually comes back to what you said earlier. So you mentioned JOLTS. JOLTS stands for Job Openings and Labor Turnover Survey, and guys like me just love that data series because it gives us so much information. What it shows primarily is the dynamism of the labor market. There are lots of people being hired every month, lots of people separating, but on average, we're growing right now. We've been growing at a rapid rate. There are lots of openings. Okay, so come back to what you said about Samsung. Usually when I hear companies complain about that, I don't worry too much about it at the company level. And the reason is any single company, even Walmart, is not big enough so that it can't attract other workers from other firms if it's willing to raise wages. So go back to what you were talking about earlier. When we talk about a sector as a whole, though, there's an issue. And I think one of the big problems that we've had in the economy and in this country is that the whole bottom half of the wage distribution is not getting the skills necessary to keep up with a modern economy. And that's going to be a fundamental long-run problem for us. So the complaints that Samsung and others are voicing is, again, it does have merit when we think about it as a sector as a whole. And I think we need to revisit that, think about our educational structure, and perhaps take some lessons from Germany, Switzerland, and Austria, which train their workers for labor force jobs that they're going to actually have.